We are back on Morning Line. Thanks for joining us this morning. We're talking with Dr. Friday. It's nice. Look at you. You're on TV. I like that. And it's good to have her on. She's a tax expert. The number 737-7587. We may not get a ton of calls this morning, even though the lines are open, because April's away. But I think what we're talking
people
about...
People are thinking about turkeys. They're not thinking about taxes. They're thinking about what kind of stuffing am I going to put in my turkey this year.
That's a much more pleasant thought.
Yeah, we could do a cooking show.
Yeah, we could. But you're a big tofurkey person, right? You like the tofu-shaped turkey, is that?
No.
Just kidding.
I'm all about beef.
Yeah, beef. Okay, some people for Thanksgiving do the prime rib or something like that. Anyway, we'll do a cooking show one of these days.
Yes, I'm sure that would be very entertaining.
Hey, did you say, I wanted, a lot of people I know that watch the show, and yesterday we actually did a Social Security program.
Oh, cool.
Oh, Social Security is taxable?
Social Security can be taxable, which is very surprising for a lot of people listening sometimes, because they'll come to my office and say, I was told that I could keep working and I didn't have to worry about Social Security, or I took some money out of a 401k or an IRA because I wanted to pay off the house, and I found out that my Social Security became 85% of your Social Security can become taxable.
Based on if you have other income coming in.
If you have other income,
that's how it works.
And it's like $30,000, but they take half of your Social Security to come up with that. So if you're making $30,000 plus your Social Security, you're going to be basically taxed. So if your Social Security is $20,000 a year, to start calculating, you'll take 10 of that and add it to your income plus whatever else to come up to that first $30,000. So it's very confusing. A lot of people think that's not fair.
Yeah, I don't
it's
understand
not fair
that.
because we paid tax on our Social Security when we contributed it. It's just one of those things that wonderful presidents have pushed through.
Now, so if you're in a situation, and hopefully you're not, because Social Security is meant to supplement, not be your sole income. So if you're someone, though, that's on a fixed income and you're collecting just Social Security and that's it, that alone's not going to be taxed. But if you have a substantial additional income, I don't understand why they just don't tax your additional income and not your Social Security.
It was that way until I believe it was Clinton that put the first one in, and then I think
because we paid.
Reagan
That's
put
already
the second.
our taxes, our Social Security.
But here's another trick: if you're retired, let's say you've retired, but your wife is still working.
Okay.
You still file married filing jointly.
Okay.
Because your wife is earning a salary, most likely it's higher than that $30,000, your Social Security is going to become taxable because of her income, not just because. So you just want to make sure, and if you're on disability, many of you sometimes, Social Security disability, and a lot of people say disability is not taxable. It's not taxable if you're the only person filing, just like Social Security. If that's all you have, it's not taxable. But if you're married to someone that's getting disability, that money can become taxable if it's Social Security disability, not VA, but Social Security. So just be smart, because I've had several people, they'll bring letters in saying, the IRS changed my taxes and I don't understand why. And sure enough, they picked up the Social Security, which the people did not report because they didn't think it was taxable. And now they owe $5,000 or $6,000.
I'm glad we touched on that. And then as it is now, we've got some phone calls. Some brave souls want to talk taxes with us.
Job.
And the lines are open. I knew we would, because there's a lot of questions around this stuff. We've got a couple Lindas. We'll take the first one right now on line 1. Good morning, Linda.
Good morning. I've got two different things.
Okay.
I just want to ask, why is a single person sort of, what would you say, discriminated against by not being able to take head of household?
Well, a single person can take head of household if you're head of household. Head of household would mean that you have a dependent. That could be a parent, maybe you have a mom and dad that you support, or a child that you're taking care of. They then can be head of household. If you're just single, taking care of yourself, well, you're not head of household. There's no one else that you're head of besides yourself.
Okay. Now, the second thing is I've spoken with Josh Horn on the program before about this situation. I'm receiving retirement. I'm receiving Social Security, and I'm working a small part-time job. That part-time job is not going to go over the limit. Now, also, this past year, I've won a lawsuit settlement and have received a check for that. He told me that that would not be part of my income, but where do I have to put this in on my tax return as added whatever? I guess it's not really income, but it was just winning the lawsuit.
Okay.
That's what I need to know.
And Josh Horn, by the way, is the expert with Social Security that was on yesterday.
Yes. Really quick on that one, was that from loss of wages on a job, or was it due to medical purposes, the lawsuit?
It was neither. It was lawsuit, well, I can't talk too much about it,
That's
but
right.
a lawsuit against the company.
But when you won the case, was it because of discrimination where they basically eliminated your job for some reason, or was it because you got hurt on the job?
No,
Neither.
it was not related to that at all.
Okay. Well, usually that's the only two that we have. So what I'm trying to find, if it had anything to do with a medical purpose and a lawsuit, you don't have to claim it. It is not taxable because it's not. It's to benefit you, to take care of you in the long time of your life. If it's due to some sort of discrimination or loss of wage or the fact that you weren't able to work there, whatever, then it's other income. It's going to line like 17 or 19 on your tax return where it says other income at the bottom of the first page of the 1040. That's where you would report it, and it would be taxed as ordinary income.
Okay, well, it was a lawsuit against a company who had basically told untruths about their business, and there were like 90 of us just recently that were involved in the lawsuit.
Well,
Hey, how much did you win?
How much did I win? Well, according to my lawyer, I cannot divulge.
Nosy.
Well, you can't say you don't have to say the company.
No.
I was just wondering how much money you got. So they just gave you a financial settlement.
Yes.
They gave me a financial settlement.
Are you going to buy an island in the Caribbean?
It was over. Well, yeah, we probably could.
Oh, okay. Say no more. Say no more.
God.
Okay, go
Leave
ahead.
it to Nick.
I'm sorry. It never hurts to ask, right? All right.
Well, yes, it
I don't want to get
does.
her in any trouble.
Right. No.
Okay.
And in her case, she might want to definitely check with a tax person because depending on how that money came, it could be tax-free money. So we just want to make sure you're not paying taxes on money you should not pay on. Is all I'm going to say on that one. So Linda
Fair
needs
enough.
tax advice on that one.
Linda, thank you for your call. We have another Linda on line too. Hi, Linda.
Hello, how
Good
are
morning.
you?
Good, good.
Yes, I have a question. My husband has beetle hounds he hunts with. Sometimes somebody will want to buy a beetle hound from him. He might sell one a year, two a year, even 5 a year. It's not a business.
No.
It is
It's a
his
hobby.
own personal hobby. And does he have to turn that money in on income tax?
It's a great question, and I'm going to say
what's-
no because I'm a dog lover and I know how much it costs to raise dogs. Theoretically, if it was a business, all the dog food, all the veterinarian, all the breeding costs, whatever it might be, would be added up, and then you would take and divide it by the number of puppies and blah, blah, blah. So in his case, I think if he added up all the cost of all of his dogs, turned around and divided it by the number of puppies he's selling, he'd be at a loss situation, and therefore it's a hobby. So you would not report it. If you want to do all the math and find out, theoretically, if he makes more than $500, it would show up on the front, same place as that lawsuit where it says other income, and he would report that sale of the hound or the beagle hound in there. But I would say that most likely he would have more costs, so it would basically, and you don't want to go negative.
So
because
not
it's a
really.
hobby.
So don't worry about it then. I mean, if they're talking about income, it is income, but balanced against these other costs, he's losing money. I see what you're saying, but
Right.
still, I mean, I've wanted the same thing. You know, I mean, I don't want to cheat the government, but if you sell, like for instance, if I sold the honey out of my beehives, which
Exactly.
I don't, okay, but if I did,
beehives?
I have beehives.
Oh,
I
I
have
gotta
honey.
come over and see
But
those.
they're neat.
Okay.
You won't get stung. Anyway, if I were to sell that honey,
Yes.
Now, the work and the effort I put into the hives,
Exactly.
I probably would take a loss. I don't
Right.
get a lot of honey, but I mean, if I made, though, say $1,000, what would do I need to put that on there?
Theoretically, again, and it would be mathematically, you know, because some years you'll have great things, other years
Yeah,
you'll
right.
have
It's better than-
losses. It
that's
take
right.
you know, so you'd have to average it out. So, you know, if it's $1,000, I mean, my dogs cost more than that for each one of my dogs. So some of my breeders, you know, you could get some good money from breeding dogs if you've got some blue tick hounds and some of the high-end, mine are Great Danes.
Okay, but what
so
if,
AKC,
all right,
so I
well,
mean,
what if you know that you have some expenses, but what you're selling it for, let's say you're an artist,
Right.
and you sit down
I've
one
got lots of
afternoon,
money, yep.
you paint something spectacular, and someone buys it in a gallery for $5,000.
Right.
You have to,
you report it as other income,
now,
period.
unless they pay you in cash.
No, you report it as other income, period. And that's what, I mean, her husband would have to sit down. If he's selling these dogs for $2,000 and $3,000 per puppy, and that's not unreasonable to assume if they're really great hunters, then,
Oh, yeah.
you know, he might want, you know, in some of the years that are to follow, one puppy, probably not, 5 puppies that year, he may need to report some income because the fact that it was probably above the cost of the whole maintenance for that year of the dogs. And again, I'm not his accountant, but I would say that would be where I would take some
Yeah.
number crunching and
But
just
the
put
way
it
she
together.
described it, once in
Didn't
a blue
sound like
moon,
it was a
I think
hobby
she she's
to me.
okay. But I really appreciate her asking that question.
That's a great question,
These are
actually.
people that want to abide by the law. Thank you, Linda.
Unlike Nick.
Let's go to Joyce. Joyce, good morning.
Good morning.
Hi, Joyce.
I was wondering if she could explain to your viewers about the state income tax or the Hall tax. Most people have a misconception that there is no state income tax in the state of Tennessee. I've been paying and filing it for over 40 years.
All right, so great question, and the reason we all say there's no income tax, and you know this as well as I do, Joyce, because it's not taxed on, quote, earned income. It's taxed on interest and dividends, and it's not even a black and white of what interest and what dividends. Some of it will be if it's out-of-state interest or out-of-state dividends. If you have, if you self-mortgage houses, a lot of my clients would do that, so all the interest, even though it's in-state, that interest is taxable by the Hall tax. If you take distributions on K-1s, there are all kinds of little things, but it's not income tax. So if you have a real job, quote, a W-2 job, and you will not be filing the Hall tax on those wages. You only file it on interest and dividends, depending on there's an exclusion of like $1,250 per an individual, or
And the state knows about that. They send you a form, or do you have to know and accumulate what your interest and
you
dividends
need to
is?
know. And nowadays the IRS is tattling back to the state.
I was going to say, how will the state know?
So you will get a letter saying you may be qualified, you may be required to file the Hall tax, and you'll get this letter saying it if you didn't file it in the past. The federal government, and that could take a year or two. So guess what? Now you've got penalties and interest on top of what you would have owed in the first place.
Okay, and the reason you've been paying then, Joyce, is that you have a lot of investments, and that's been what you've been living on.
No, I don't live on it, but yes, I do have a lot of investments.
Okay, and so when you get that money, then you've been paying on it for 40 years.
She may not even be getting the money; it may be being reinvested and growing. But
even
she
so,
has
she
to
still
still
has to
pay
pay
the tax on it. Yes.
I'm really glad you brought that up, Joyce. I think a lot of people don't really realize that, and it's been there for years, hasn't it?
Yes, it has, and that's what I was questioning, because one time there was somebody on CBS, a news reporter, that said there wasn't an income tax, and I called in and I told him that. And he said, my goodness, I have investments and I haven't been paying.
Yeah.
There's a lot of people.
Even tax preparers, several of them that have not been, in business as long, Joyce, I have had more than one come in and I'll say, do you file the Hall tax when I review the individual's taxes? And they're like, no, I didn't know I was supposed to.
Yeah.
So that's something, and it's only been the last couple of years that the IRS has been tattling back to the state. So you'll get caught up.
Joyce, thank you for your call. We got to take a break.
Yes.
So we'll take a break when we come back. If you're on hold, Anita, Fran, Ricky, and others, stay there. A couple lines open. As usual, the allure of Dr. Friday brings the calls in. Questions about taxes, she's great answering. We'll be back with more. We're with you till 9 o'clock. Stay with us.